Welcome back. You're still tuned into Midcap Radar. Well, Supreme Industries is the company on our radar, has reported a weak set of numbers for the second quarter. This is largely led by a decline in PVC resin prices, which has led to a fall in margins, largely because of inventory losses. Let's discuss this and the outlook going forward. We have with us Mr. MP Taparia, who's the MD of the company. Mr. Taparia, good afternoon. Thanks a lot for joining us. It's always a pleasure speaking with you. Well, as you can see, it is a sharp margin decline this time around. Can you tell us how much have the PVC resin prices fallen by in quarter 2? And now in quarter 3, have you seen them getting back, seeing some recovery? Is inventory loss a thing which will gradually reduce for the company and the industry?
You see, in the first half, the PVC resin prices dropped from 140 rupees to 90 rupees, a drop of 50 rupees a kilo. In the month of October, they further dropped by 7 rupees a kilo. We believe the prices now have come close to bottom, and our experience says when prices drop too fast and too much, then after a certain period, the prices are bound to jack up. Because so many marginal producers may not be able to operate the plant at such a low price. So we believe that most of the inventory loss has already been factored in the working of first half. Things should look better going forward, definitely in the last quarter.
Okay. So, your margins came down all the way to 7% versus 16.1%. And this is versus 12% in the previous quarter as well. Now, based on the fact that you think that most of your inventory losses are factored in, PVC prices have probably hit a bottom now. What is your guidance in terms of margins? Where do you expect it to probably settle? Your earlier guidance for FY23 was 15 to 16%. Are you in a position to maintain that?
We believe that for the full year, our margin will be between 12% to 12.5%.
So you don't expect it to be 15 to 16%, which you had guided for earlier. You expect your margins to come to around, to average between 12 to 12.5%.
We are right.
Okay.
Okay. Mr. Taparia, in your press release, you have also mentioned that because of this steep fall in PVC resin prices, volumes could improve because affordability will be better. In the first half, you've done volume growth of 27%. What will the entire year look like in terms of a volume growth for the company?
For the company, we anticipate a volume growth of minimum 20%. And for our plastic piping division, it will be excess of 25%.
Okay.
Okay, all right. So that's your volume guidance. Sir, you're a very cash-rich company. You have a cash surplus of around 493 odd crores. You're debt-free as well. Do you think that it's time to probably look at growth via maybe inorganic means? And if you could guide us on whether or not you are probably considering that?
We are open to inorganic growth. If there is a right proposal, we are open to inorganic growth.
Okay, but anything that you would probably want to guide investors for, and maybe not only inorganic growth, any kind of utilization of cash which you have on books, which you've considered maybe rewarding shareholders as well?
And first, we have got a large investment program.
Okay.
Our investment program for this year was 700 crores. And we stay committed to have a total investment, including carry forward of 280 crore rupees, to commit an investment of 700 crores this year. Going forward also, we have got a large expansion plan, so we will continue investing more and more money in our business.
Okay.
However, if we get a good proposal to have an inorganic growth, we are open for inorganic growth plan also.
Okay. You have identified any of the targets that you can actually look at? Anything in the works?
Not at this moment.
Okay. All right. Can you tell us more about the capacity expansions? One of it is going to come on stream in December. There are more planned, as you just pointed out. In this year itself, how much will the new capacity add to your overall revenues? And you had guided for revenues to, come in at 9,000 crore rupees. In first half, you are sitting on revenues of 4,200 crore rupees. Will you be able to achieve that guidance of 9,000 crore rupees of revenues?
We are very confident that in spite of fall in the prices of polymer, we will achieve a turnover around 9,000 crore rupees. this year.
And how much will the new capacities add to in the revenue guidance that you just told us?
New capacity will be 80,000 ton for the year, but some plants started in the month of July, some are going to start in November, some are starting in December. So for the full year, we may not get full benefit of the expansion, but marginally get benefit of the expansion also.
Okay. Y'all did have an order win or a letter of intent which you've received with regards to the Jal Jeevan mission, which is worth around 480 odd crores. When does execution start on that? Any more government orders in the pipeline that we could hear from?
We are told by the government that they will start buying from the month of November.
And when would it show on your P&L, sir?
Maybe between a period of 24 months.
Okay, and what is the pipeline of projects that you're bidding for from the government?
Means around 20 crore rupees every month, starting from November this year.
Okay, 20 crore. And that new capacity addition, you said it will add some figure. Is it around 200 to 250 crore rupees in this year itself?
Sorry, say it again.
The new capacity, how much will add to your revenues? If you can give us a ballpark figure, because they will be at different capacity utilization levels, but an absolute number here?
As we told you, in plastic piping, we will grow by 25%. As the new capacity fully will get advantage only for 4 months and 80,000 ton per year.
Yeah.
So around 30,000 ton production extra will get this year from the new capacity.
Oh.
Okay. All right, so we're going to leave it on that note. Thanks very much for joining in this hour.